It's already 2025. I'm here to share some insight. Happy New Year 2025 to all in Australia, moving there, or in Hong Kong. Many messaged me about my SBS interview on investing experiences. Happy New Year 2025 to everyone in Australia, moving there, or in Hong Kong for the holidays. They saw my SBS interview about connecting with investors in Australia and overseas. I mentioned two potentially embarrassing Christmas gifts. What are they? Why did so many people message me during Christmas? Besides sending Merry Christmas wishes, they noticed my SBS interview where I shared experiences connecting with investors, both local and overseas, discussing common situations. About those two Christmas gifts I mentioned, they might be a bit embarrassing. The first gift is that many investors like Australian real estate for its stability. There's a lot of media coverage about real estate. Buying a primary residence and using investment properties to enrich your portfolio is valid and can be a life goal. And which one was given as a Christmas gift? What were the two Christmas gifts among them? I mentioned that it might be a harmless gift, but what exactly is it? Many local and overseas investors favor Australian real estate for its stability. Media covers it, but buying a home and investing is valid. How can you generate more capital and a larger down payment? Besides income from your job, consider stock investments. Let's examine the data on the Australian real estate market's performance. From September 30th, 2011 to September 30th, 2024, the median property value in Australia increased by 101%, and in the last 5 years, it rose by 47%. How can we create a larger principal and a larger down payment, in addition to relying on the income from the first job? Can stock investment, which is often ignored by many citizens, become one of the considerations? Let's examine how the Australian real estate market performed recently. From 2011 to 2024, the median property value rose 101%, and in 5 years, it rose 47%. Thus, people see Australian real estate's merits. Now, let's see state performance. First, New South Wales, where in 15 years, it increased 128%, outperforming the market, while in 5 years, it rose 42%, lagging behind others. I'll talk more about the factors behind this later and why people find real estate appealing. But for now, let's look at the performance in other states. The first one is New South Wales, where we can see that over the past 15 years, it increased by 128%, slightly outperforming the market. However, in the last 5 years, it only rose by 42%, which is a bit of a lag compared to others. Masters and Huasia. Has there been an increase in the past 15 years? It is 74%. In the past 5 years, it has been around 17%. This is why it has underperformed the Australian real estate market. Queensland has been a hot market recently, with a 114% increase over 15 years. The most significant rise was in the last 5 years, starting from 2019, with a 78% jump. This is likely due to locals moving there, overseas investors, and new immigrants optimistic about infrastructure development. Western Australia has also gained attention, with a 71% increase in the last 5 years, outperforming the Australian market. However, over 15 years, it lags with a 65% increase. There are many, because everyone is optimistic about the prospects of some local development infrastructure. There may also be many overseas investors, or some new immigrants, making Queensland one of the more popular places in recent years. A market. Western Australia has been hot in the last 5 years, increasing by 71%, outperforming Australia. Over 15 years, it lags with a 65% increase. Will it benefit from supply shortages? Local immigrants and overseas investors may help it rise. More on this later, but a teaser. I'll share observations from investors and friends on the Australian real estate market. With immigrants, investors, and new immigrants, the market could catch up and rise. We'll discuss observations on the Australian real estate market. Now, let's discuss key points investors notice or overlook. Many feel stocks aren't appealing due to the ASX 200 index. In 15 years, the index rose 106%, and in 5 years, just 23%. Thus, it may not seem attractive. Have noticed or overlooked some important points. Let's discuss how many investors think one reason stocks aren't appealing is when viewing the Australian ASX 200 index, it seems unattractive. In 15 years, the index has only increased by 106%, and in 5 years, it rose by only 23%. Thus, it seems to lag behind the Australian real estate market. Understandably, however, considering factors like your advisor's input, your own stock selection, or choosing ETFs, I use the general index for comparison. Like with real estate, it might be lagging behind the Australian real estate market, but here, I'm not talking about advisor input, stock selection, or ETFs. I'm using the most general index for comparison, as I did with a real estate market, rather than on specific areas. So let's compare fairly. You'll see that the Australian ASX 200 index seems to be lacking with tech advancement, info transparency, and investor maturity. Investors are making global investments themselves or seek professionals for allocation. We often use the S&P 500 index as a benchmark. If we look at the performance 15 years, the S&P 500 index. A suburb is so beautiful that you can choose it. So, if you try to compare some apps from Apple to Apple, you will see it, right? Australia's ASX 28 index really seems to be in contention. With technology advancing and investor maturity, more investors are making overseas investments or seeking professional help for asset allocation. We often use the S&P 500 index to assess performance. Over 15 years, the S&P 500 increased by 409%, and in the last 5 years, it rose by 93%. This growth outperformed the Australian real estate market in the past 5 years. When considering asset allocation, it's not just about real estate. A balanced approach is worth considering. Don't put all your eggs in one basket. Diversifying your asset allocation is important and worth discussing. From 409% in the past 5 years, the increase was actually 93%. So in fact, the increase therein actually outperformed the overall situation. Apart from the Australian real estate market, even the hottest markets in the past 5 years have been Queensland and Western Australia. In fact, the S&P 500 index outperformed them. When considering your investments, it's not just about real estate. A balanced approach is key. Don't put all your eggs in one basket. Discussing diverse asset allocation is important. I'm using both real estate and stock indices for comparison. With 200,000 Australian dollars, consider what to think about in real estate and stock investments. This chart shows fees for real estate and stocks. Use these expenses effectively for better cost effectiveness. Some costs, like down payment, stamp duty, and legal fees in real estate, are unavoidable.
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me.
I'm using real estate and stock indices for comparison. If you have 200,000 Australian dollars, think about real estate or stock investments. I hope this clarifies things. This chart shows fees for real estate and stocks, part of your holding costs. Use these expenses effectively. Some costs are unavoidable, like down payment, stamp duty, and legal fees in real estate. Even though the Australian market is hot, consider low liquidity. When the property market cools, how long to sell your property? Will you sell at a lower price? These reflect low liquidity. Stocks have liquidity issues too, related to market prices and transaction costs. These costs are part of your holding costs, and you shouldn't just think about how to avoid them. Instead, consider how to use these expenses or costs more effectively. In other words, the higher the cost effectiveness, the better. However, there are some things we just can't escape. For example, in real estate investment, if you have 200,000 Australian dollars, you might be thinking about the down payments, stamp duty, and legal fees. Some think low liquidity isn't crucial, but consider when the property market cools, how long to sell your property. Will you sell at a lower price? These scenarios reflect low liquidity. Stocks also face liquidity issues. In real estate, people consider loan costs, maintenance, and community fees. A common oversight is claiming real estate appreciates significantly. However, Stocks can also leverage. Let's view it from having $200,000. Stock costs are generally lower than real estate. Real estate involves loan costs, maintenance, and community fees. I won't focus on loan costs here, but a common misconception is that real estate appreciates significantly due to bank leverage. Stocks can also leverage with quality blue chip stock or funds. Risk tolerance varies, so consult professionals if interested. Consider a $200,000 perspective. Real estate operating costs are higher, including rental vacancy costs, like advertising for tenants. These are often overlooked. I'm not saying stock are better than real estate. Both have unique costs and consideration. One reason is that you might have used bank leverage to increase your principal. Secondly, stocks can also do this. If you have some quality blue chip stocks or good funds, some investment platforms can actually offer you this kind of leverage. However, everyone's risk tolerance is different, so I won't go into too much detail here. It's best to consult with professionals if you're really interested in exploring this further. But let's look at it from the perspective of having $200,000. Operating costs for real estate are generally higher, including rental vacancy costs. When a property is vacant, advertising for new tenants is necessary. These costs are often overlooked. I'm not saying stocks are better than real estate. Both have unique costs. It's about using these costs effectively. Real estate and stocks offer tax benefits, depending on the tax framework. For more information, consult tax experts. Speaking of taxes, don't let tax concerns delay investments. Whether local or new investors from low tax areas like Hong Kong to high tax areas like Australia, tax worries can be distracting. These cost factors are not something to avoid, but rather to use more effectively. One thing that everyone often notices is that real estate has a lot of tax benefits, and stocks do too, depending on the different tax frameworks you're using. I won't go into too much detail here, but if you need more information, I think you should consult tax experts to share insights and help you understand the situation better. Regarding taxes, my second gift is not about tax arrangements, but to stress that tax worries shouldn't delay investments. I've seen both local and new investors from low tax areas like Hong Kong to high tax Australia get caught up in tax concerns. Overseas investors also hesitate due to Australia's tax system. This is counterproductive. Delaying investments means missing opportunities. Paying more taxes might indicate higher returns. We need to focus on investing first, then address taxes. We shouldn't ignore taxes, but remember the main goal. There are also some overseas investors who often think about Australia's tax system being quite complicated, which might lead them to hesitate in making investments. I believe this is counterproductive because the longer you delay investing, the more likely you are to miss out on great opportunities. In fact, if you end up paying more taxes, it could also mean that your investment returns are increasing. So I think we need to flip this perspective around. We should focus on the right side, which is about investing, and then, meanwhile, we can deal with taxes. It's not that we ignore taxes. We do need to address them, but remember, not to lose sight of the main goal. Delayed investment applies to both stock and real estate markets. Delaying investment due to taxes can make time your enemy, not your friend. The ASX 200 index underperformed real estate. Let's see the opposite of delay. The ASX 200 index rose 106% in 15 years. Reinvesting dividends turns it into a 325% increase, an extra 200%. Two key messages. One is the welfare effect. Time should be our ally in investing, not our enemy. The ASX 200 index has lagged behind real estate. Let's explore what delayed investment means. The ASX 200 rose 106% over 15 years. Reinvesting dividends every 6 months or annually turns it into a 325% increase, an extra 200%. Two key messages. First, the welfare effect can make time your friend. A small dividend may seem insignificant, but like a snowball, it grows and accelerates. That's the first message. The welfare effect turns time into your ally. Invest. That is, if we roll over some interest for investment, it turns out that in the past 15 years, it will have become a red line. That is, it has become 325%, which is an increase in the same period. 200% this time. I want to bring you two small pieces of information. The first one is one of mankind's great inventions, and it is the welfare effect. You can see how the welfare effect makes time your ally. The welfare effect makes time your friend. Whether in real estate or stocks, there are various tax arrangements. Reinvesting dividends offers tax benefits in stocks. Depending on your age, different tax strategies apply. In the session I mentioned, viewing US investments as growth-focused while in Australia I leverage the high-interest environment. Okay, the second little message is just for everyone to listen to. Well, no matter whether you are good at real estate or stocks, everyone has many different tax arrangements for reinvesting dividends. Of course, stock trading will have its tax benefits, or you need to have a tax accountant. There are different ways to arrange this at different ages. So here's what I can mention here. Every market has its own options for high and low dividend payouts. In the sharing session, I mentioned that I view my investments in the US as a growth concept, while for my investments in Australia, I focus on taking advantage of the high interest environment. Australia is actually a relatively high interest place, so I look to capitalize on that in the Australian market. I would choose some potentially high yield options, and this mindset helps me think about my asset allocation. Similarly, how can you integrate this into your real estate investments? This is definitely something worth pondering. He is grasping the market in Australia, and he will choose some that may have high interest rates. In some cases, he will use this mindset to think about my asset allocation. Similarly, how can you combine this with lost your real estate? This is definitely something worth pondering, right? In the recent teaching session, even though there were no specific investment recommendations, I hope you all can receive this little gift from me. These 2 insights could potentially benefit you for a lifetime. If you've noticed my usual appearances, whether on SBS interviews or various interviews in Hong Kong and around the world, and if you're interested in me doing more detailed sharing like this, feel free to leave a comment or message me privately and let me know. I hope you all will introduce this channel to more friends. Thank you so much, and Happy New Year! So, I hope everyone will introduce this channel to more friends. Thank you all so much, and Happy New Year!
Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.